In the world of life insurance, there's many different carriers and there's many different products within life insurance that you can purchase. We're going to talk today about what type of insurance is Primerica, and here's why it's important, folks. I want to dig deep into their marketing strategy, which is extraordinary, but the real question is, what they're selling, is it actually helping people in the long run? Stay tuned. Primerica, nursery rhyme, buy term and invest the difference. A.L. Williams created this in the 80s, and it's created billions of dollars for the company. Now, the real question is, all the families that bought term insurance back in the 80s, 90s, 2000s, 2010s, how many of those folks actually got a death benefit? Because we know, historically speaking, term insurance, the death claim happens maybe 1% of the time. In other words, 98, 99% of the time, these policies expire worthless. I have with me today Alexa Criollo.
Hello.
What's up, Alexa?
I'm great. Thanks for having me.
Pleasure. She's a member of Epic Financial Strategies. However, she was brought up in the Primerica system. We're not knocking. We're here discussing. And as we work through this, I know that a lot of folks will talk about term insurance and they'll say that it's very inexpensive. They may say, hey, listen, term insurance for a 30-year-old, $100 a month, $1,200 a year, you get $1 million worth of coverage. It's very cheap. I would argue that, well, maybe it's real expensive, because if 99% of the time these things fail and folks got to come back in and buy life insurance, it could be really expensive later on in life. They'll also say if you buy whole life insurance for that same 30-year-old male and it's $10,000 a year or $833 a month, that it's too expensive and term is significantly cheaper. Is this how you were brought up in that system? Was this part of the presentation?
100%.
You want to talk about it a little bit?
Sure. I started my insurance career and my journey in 2019 with Primerica. That's where I got licensed. And all I was taught is, hey, you got to buy term, invest a difference. That was a solution for every single person. And yes, to your point, it is cheaper, but it brings me to that saying that if the value's there, the price doesn't matter. So I think the real question is it as valuable as they make it seem?
Yeah, and listen, I know, because in the world we live in, someone's always being sold something. And by the way, this is one of the greatest marketing strategies in the history of financial services. I mean, if you tie this into a 401k, now all of a sudden it's like, okay, buy term and invest that difference. In this case, it would be $8,800 a year into a term policy for that same 30-year-old guy. If you did that for 35 years, I would argue that $8,800 isn't a tax savings. You may not have brought up, they may not have shared that with you, but it's a tax postponement that results in substantial lost opportunity cost. When you sat down with folks, how was that part of the presentation? Whole life's too expensive, buy term, invest the difference, and did you give them the difference? Did you give them models to put the difference in?
Yes. And that's really the whole approach. And I think unfortunately, there were so many times that people didn't invest a difference, right? They were just going for the cheapest option and for what was going to work at that particular moment. And unfortunately, if you're in front of someone and you're talking about any sort of planning or any sort of financial decision, it cannot be a short-term mindset. Everything should be long-term.
Yeah. And I think for all the advisors out there, Alexa just made a great point that, listen, you're going to sit down and sell somebody term insurance and you're telling them to invest the difference, but how is that being measured? Is it your responsibility to measure it? I mean, I can't say it's on you to measure it, but how do you check in to make sure they're actually investing the difference? Did you know that at that time, the importance of the difference? Or were you just excited and actually you helped the family, they got term insurance? Was there any way that you would follow up on that? Or did you realize that people aren't investing in the difference?
I think it was maybe 50-50, right?
Okay.
There were some people that I did help invest the difference. And I know we'll talk about that a little bit later on what that actually looked like in their Primerica system, because it was very specific. It's not like, you go to a financial planning firm and they have all these options, right? It's kind of a cookie cutter approach. And the ones that didn't, maybe I didn't push hard enough. I didn't sell it.
No, I don't think you're on trial. And for me, I own term insurance inside of my whole life strategy that could be convertible over time. So I understand the importance of a death benefit in the wealth, let's call it the wealth accumulation, your working years, to be able to have your family tap into your future net worth now while they can.
Yep.
So I get all that, and that's why term is beautiful. I just think that everyone's not educated on it. Any final thoughts on that?
Yeah, I actually think there is a place for term, and we're actually going to break that down. So if you want to stay with us, we're going to dig into that a little bit.
Yeah, and remember, everything we say, you can always rewind it. There's going to be some good education here, so look out for the free gifts and look out for the education that we're about to give you. So here's the challenges, the downside if you go buy term and invest, the difference. And the downside to me, once again, this is just an opinion, but it does require high level, really observation year in and year out on what's happening with the difference. Because if you go back to the greatest chart in history, which is the S&P 500 since 1980, it says that average somewhere between 12 and 13%. Now, you may get agents to say a mutual fund average this, but let's just talk about the S&P. 12% a year, maybe 13, maybe 12.4 since 1980. But that doesn't include fees. That doesn't include lost opportunity costs on those fees. That doesn't include taxes. And by the way, with Primerica, if you're going to buy one of their mutual funds, they have different share classes, and those fees are even really more expensive than a normal mutual fund or a normal managed account. So you have to understand where the difference is going. And is the difference getting murdered in fees, taxes, and lost opportunity costs? So the challenge with all this is the common term approach given is cookie cutter for everybody rather than customized for specific clients. Now, when you sit down with clients today, how do you understand the difference on how to create these custom strategies, knowing that there's a time and a place in your world where you actually did talk about term and invested difference? What is your logic now going forward?
That's a great question. I think when I first started, and I was brand new to the business. I didn't know much, but it seemed that the outcome was always the same. Like no matter what the person said, we always leaned towards the same kind of solution.
Yes.
Today, I don't know if there's been to this point 2 clients that have been exactly the same as far as process.
Yeah.
Every single person, depending on the age, on, if they're conservative, if they're a little bit more aggressive, if, they have different goals, whether that's retirement, whether that's generational wealth, estate plan, like all those different things are conversations that I now have.
But remember, people could be conservative today, but 5 years later, they may not be conservative anymore.
100%.
Right? So that's also a part that you have to factor that in.
Yeah.
And being able to measure all of their products that they have, not just one product. I know we do that here now. Was that like that for you then?
It wasn't, right?
Okay.
It was, this is my scope, and this is the only thing I can really advise you on and will talk about.
Yeah.
I think, the way we do it here at Epic, not to toot our own horn, but it's, hey, let's talk to all your financial professionals.
Yes.
Because yes, maybe we are not tax experts, but we should be able to have conversations with someone
Agreed.
filing your taxes or looking at tax strategies to make sure any recommendation we give is aligned with what they want for you as well.
Yep.
Because at that point, you are winning as the client. Everyone's working in your benefit.
And by the way, I'm not saying this is Primerica, but it's been my experience whenever somebody comes in specific to term, their whole presentation, I'll call it, or marketing strategy is, hey, by the time you get to retirement, you're not going to need the insurance anymore.
Yeah.
Your house is paid off, the kids are in college, so you don't need it anymore. But I know even some of the cases that we're working on now, we get people well into their 60s that can't wait to buy more insurance. So just beware, folks, when you're out there, if you're going to buy term, no problem there. Make sure you understand, though, that it's going to expire at some point, and there's a level of risk that you're uninsurable later on. And I think that's really the purpose of this video from an education standpoint. Do you want to speak on that at all? Yeah,
because term is not bad. I want to be clear about that, but I don't think there's ever a point in time where life insurance, like someone would say no to that. Whether you are building wealth and you don't have a lot of money, but you want to protect your family in case something happens to you, awesome. Or later on in life when you're trying to preserve and protect and properly pass down your wealth, every dollar counts. So for that broad assumption that, hey, you need it now because you don't have a lot of money, and later on you're going to have so much money you're not going to need it, that is very inaccurate. That doesn't usually happen. I don't think I've ever met someone that said, yeah, I don't need any more, and I'm good. It doesn't happen.
And that's why we want you to stay tuned for the rest of this video, folks, and rewind anything that you haven't. And by the way, don't forget to ask questions. Go in the comments. If there's anything that we just said that really kind of made sense or you want a clarity on, ask a question. If there's a video you want us to do, ask a question. We'll make sure that we do that. What's the difference between term and whole life? insurance, that's the age-old question. And my first question is, why do you have to do one or the other? Why can't you do both? If you're going to bring term into that whole life, make it convertible so it kind of works its way into the whole life. I think one thing we could agree on, and there's going to be somebody out there that says I'm a genius at investing and all I need is term and I don't need any insurance in my retirement. Good luck. I hope it works out for you. But let me speak to the rest of you guys. Whole life insurance, in my opinion, is a more versatile product. In your working years, if you set it up the right way, you could use it as a bank. In other words, run money through it, leverage it out for other opportunities. We'll get into that in a second. In the longer term, you could access funds income tax free to complement your retirement. Whole life gives you the permission to spend your money in retirement at a much higher rate, not just the interest, but you can spend down the principal without needing to worry about running out of money. And that is a fear for a lot of folks, that they're going to run out of money in retirement. Last but not least, in the long term, it helps you with the transfer of generational wealth. Rockefeller, let me give you a shout out. Waterfall method, let's go. Parker Russo, yes, you're always going to be leaving something to your heirs if you do it the right way. So Alexa, you've been on both sides. Mm-hmm. I'm not saying term and a whole life is much greater than term. I'm not going to say that. But share your thoughts on the difference between term and whole life and what you've seen now.
So I think there is a place for both. Okay. And to say that one is good or bad, someone's lying there, because every single product in the market exists and has benefited someone at some point in time.
Yes.
And I think that is so important to acknowledge. Whole life has been, first of all, around for hundreds of years, right?
Yes.
It's served so many people. So to have such a strong argument that it's bad is wrong.
Yeah.
Now, what I learned coming to work with Epic and, kind of learning how we do things here is whole life is such a foundational piece to every single other thing that you'll do financially.
Yes.
Right? Obviously, with insurance, the earlier the better. You're younger, you're healthier, easier to insure.
But listen, for folks that are in their 50s and 60s and saying, what about me? It's not too late. Trust me, we're working on that, because you could overfund it, and there's certain things we could do to really leverage that up.
100%.
Yes.
Now, from a foundational standpoint, it's let's diversify your cash. Let's build this up, like you said, overfunding. That's really the key. And the reason why people think whole life is quote unquote bad is maybe they're not viewing it as a way to supercharge their savings and to complement investments, but it can really do that.
Or simply educated the right way.
Yeah, 100%.
It comes down to education, at least in my opinion. I think about, we have a client that we're working on, we'll never give a name, has an IUL that has a $10 million death benefit that he had no idea, he's 67, in 3 years it's going to be worth $4 million. So it comes down to full education. Understand that this guy actually needs even more than 10 million. That's how wealthy he is. Thank God he's healthy, but the point is he didn't understand that. And this is where it comes down, what I say about education on each and every product, because it has its proper place. And that's why it's important that you make sure your right hand speaks to your left hand. Your insurance agent is on the same page as your accountant, as your fiduciary, because if that happens, you're going to put yourself in a good place. So you may be saying to yourself, should I buy term insurance? Am I buying whole life insurance? What am I doing? Rob, what are you actually saying? This is education, so I'm saying that you should consider it all. But how does it sit and fit with your core values? And when you're buying it now, is it going to help you later on, no matter what you do? And Alexa, let me ask you this. Who should be considering to buy term insurance?
Well, term insurance works for some, but it may not be what they're advertising. So it's probably not the best fit for generational wealth building, at least not for every single person. The term insurance strategy, if it's just that one approach, often assumes that the client may not be able to grasp the idea of becoming your own bank. So it may be a good strategy for someone anywhere middle to low income. And for me, it's like, okay, if you are not making a lot of money, but you have 4 kids and you're the sole, income producer in your family, yes, you need insurance. I don't care if it's $20 a month, $30 a month, $100 a month.
Absolutely.
Cover yourself because it's important. But if it's being advertised as, hey, this is a wealth building strategy, I say, okay, but an insurance policy is only as valuable as it is when it's active, and if it's active when you need it.
And by the way, let's talk about the people that watch our channel. They're entrepreneurs anyway.
Yep.
Even if right now they're in the middle or lower income, they're seeking to learn more. So if you're in the stage of where you're creating your side hustle, or if you're creating other opportunities, but the finances haven't happened yet, term is necessary for your family's protection. Because remember, if your house burns down, you're going to get full replacement value. Your wife and kids, or your husband and kids, deserve the full replacement value of your future income. And that's why you should consider term. All right, folks, there it is. You got a lot of really good information. Alexa, thank you so much for being part of this.
Thanks so much.
I know you have a journey here that could really help a lot of these folks. And remember, if you want to be able to get your own, let's call it free checkup under the hood on your insurance side. If you have any questions, go ahead, click the link below. Don't forget to like, share, and subscribe. And remember, when you sit down with one of the Epic coaches, they're not here to sell you anything. They're going to give you an education. There's no obligation. Thank you for checking out the channel. Please, if you want us to do more videos, let us know. And definitely click so you can get that appointment so you can learn more about how to and what to buy when it comes to your money time freedom.